If you learn how to read charts like a pro, you'll basically be an investor mind reader.
Square.
Good guess, but wrong.
Hi everyone, I'm Marc Lichtenfeld, Chief Income Strategist with the Oxford Club. Welcome to State of the Market. Who are you and what have you done with my husband?
What's gotten into you? What's happening?
That was what my wife said to me many years ago when I was studying for my Series 86 exam, which I needed to pass to become a sell-side analyst. I was hitting the books pretty hard because my livelihood depended on it. I'd only get 2 shots at passing this extremely difficult exam, and if I was unsuccessful, I'd be told to hit the bricks.
You're fired!
I passed on the first try. And so I was sitting in my office working on an earnings forecast for a company I was going to cover when my boss, the director of research, walked in. You know technical analysis, right? Sure, I said suspiciously. This was a fundamental shop. Good. I want you to write a technical note every morning for our clients. Now, in case you're unfamiliar with the terms, fundamentals refer to a company's business, its financials, its valuation, etc. Technical analysis is the study of a stock's price action. It doesn't take any of the financial measures like earnings, cash flow, margins into account. Now, most people on Wall Street fall into one camp or the other. Now, I've been fortunate to have been trained in both disciplines. What I've found is that for shorter term trading, technicals is the way to go. Now, sure, an earnings report can move a stock, but for the most part, when you're trading with a timeline of a few weeks, days, or even hours, understanding how to read a stock chart is critical.
No, sales aren't up, they're down.
You see, a stock chart is a visual representation of the emotion in the market, specifically greed and fear. You can look at a chart and know instantly if investors are feeling greedy or fearful on a particular stock or the entire market. And human emotion is somewhat predictable. If it weren't, there'd be no social media industries or advertising, and your ex wouldn't have been able to push your buttons so easily like when she kept talking about your mother. You keep Barbara's name out of your mouth. You keep Barbara's name out of your Today, I'm going to show you 2 very basic concepts that will help you look at a chart and understand if emotion is changing. The first is support. That's an area in the chart where a stock stops going down. We don't know the reason, but for whatever reason, every time the stock reaches that level, selling dries up and buyers take over. You can see on this chart of Enterprise Products Partners, each time it fell to $23, it bounced. That's called support. Now, 2 things to know here. If the stock falls below support, something has changed with how the market views the stock because previously each time it hit $23, that level held and the stock rallied. So if it doesn't, it's probably not a good time to buy it or even own it. You might want to seriously think about selling. Now, if you're a trader, as a stock bounces off support, that may be a good time to buy because you know that historically the stock stops going down at this point. If it does go down and break support, you get out quickly and keep your loss small. Now, the opposite of support is resistance. This is the area where a stock stops rising and retreats. Buyers have stopped buying and the sellers have taken over. This chart of Cisco shows resistance at about $45. If a stock breaks through resistance, that suggests that there are no longer enough sellers to keep the stock down and it should continue higher. So it's a good time to buy. On the flip side, if it cannot get through resistance, it's a good indication the stock will fall back once again. Now, here's another chart. This is Amazon. Can you tell where support and resistance are? Support is at 102.5 because the stock stopped falling every time it hit 102.5, and resistance is at 130 because that's where it stopped rising. Since the stock hit those levels several times, you know that if support or resistance is broken, the sentiment on the stock has changed substantially, and the stock will likely make a strong move in the same direction. Now, support and resistance are the starting points, the building blocks for technical analysis. Let me know if there are other areas of chart reading that you're interested in, and I'll try to discuss it in an upcoming video. And if you're interested in trading stocks alongside me using technical analysis, I'll be buying and selling the same stocks and options as you. Just check out my presentation. You can do that by clicking on the link below. Thanks for watching State of the Market. I'm Marc Lichtenfeld. I'll see you next time.